Thank you again for coming. Here's part 2. Let's start with our current raise needs, because this is where we talk about money. These items are priority and they came right out from our strategic plan. Again, you can pause and look if you want more detail. Our expenses break down again. Here's the nitty-gritty of our offer. We're paying an extremely generous return. You can get from 2 times up to 10 times your original investment by the end of this. So I want to answer a few preemptive questions here. Why revenue-based? First of all, it will enable us to focus on what we do best, which is making amazing products and taking them to market without worrying about timing market conditions just right to achieve an IPO or an acquisition. This way also benefits you as the investor because you aren't relying on a single exit to make all your money at once and all or nothing. You get paid as we grow, and there's a much lower risk because you're only relying on us doing the above, which we know how to do well, instead of trying to play dangerous market games and put you at a bigger risk. So our payment timeline, I'll pause here so you can take a look. You can see our projected milestones pointed out. First payment, break even, half multiple, and full multiple. This slide also contains our revenue projections over time. Here I want to point out our MO. This is actually important because there's some powerful data that shows how much better impact companies do as investments than traditional profit-only companies that aren't looking at anything else other than the financial bottom line. Still, I get wrong assumptions from people sometimes. I'll let you read this. These are really powerful links, by the way. They'll be shared below so you can look at them yourself. Risk, there are also some wrong assumptions on this. And in the words of one money manager, I love this quote. Diversity and risk, this goes without saying. For as long as diversity has been measured, every single study says the same thing. Diverse teams perform better. This is my favorite slide in the whole deck. Impact investing can have a bigger impact than philanthropy. I've talked to a number of people actually whose primary motivator is doing good more than getting a return. With this investment, you can do both and get your recycled capital back. Be sure to visit those links. They share some really powerful data. So you can use a portion of your investment portfolio or your philanthropy fund to invest in a diverse, woman-led social impact company, and that would be a total no-brainer. Thank you again for listening.